Alright, I'm uploading this YouTube video because for some mysterious reasons, I broke the community guidelines and violated them on TikTok. So they removed my latest video where I talk about the Fed and what will happen on the week after the 13th of December. So I'm not a Alex Jones kinda conspiracy theorist. However, it's very suspicious that the video where I more or less did not try to hold back as much and just, spoke my mind was deleted and all the other videos were fine. So I'm uploading that video that was deleted by TikTok again here on YouTube for you to watch. So here it is. Alright everyone, if you thought this was bad, get ready for the week of the 13th of December. Not only will the Fed hold their FOMC meeting on that day, but the decision to raise the debt ceiling and to push the Build Back Better plan will be also on the 13th. Remember my last videos where I told you to hold 25% of your portfolio in cash? Keep holding it because it might save your portfolio. I don't have a good feeling about this. They have to create a crisis to push their sick agendas of unlimited money printing. Because the Build Back Better plan is nothing else but a welfare expansion. So this plan has to be executed very swiftly. A lot of people are realizing that the Omicron variant is not as bad as their fear-mongering is telling us. So maybe the crash would not be 20% down, but only 5% down. If I'm wrong, I'm sorry. But if I'm not, I just saved your portfolio. Okay, so on the 14th, there will be the FOMC meeting of the Fed. And I don't know how or exactly when, but the week after the 13th has a lot of important dates in them. The question is, why would they crash the markets? Well, the short answer is it would benefit them. It would benefit them in various different ways. For one, they make the decision of the second half of the Green New Deal, the BBB, the Build Back Better plan, on the week of the 13th. To push that new welfare expansion, that's what it is. It's a $1.75 trillion welfare expansion. To push it through the Senate, a crisis or crash would be the perfect excuse to push those bills. This happened in the past. This is always what they do. So I don't expect them to do anything else this time. Another reason would be it would give the Federal Reserve plausible deniability to print more during times of high inflation without raising rates and crashing the entire economy. Because if they raise interest rates, that would not only bankrupt the government, but it would totally destroy the economy. But just like what happened in 2018, when the Fed raised rates to 2% in December 2018, shortly after, there was a crisis, right? COVID. Who would have foreseen COVID? And that gave them plausible deniability to roll back their interest rate hike back to zero and print even more. And printing more is required for their welfare expansion. And the last reason, which in case I didn't mention it yet, is for you to buy bonds. And the best way for investors to rush into bonds is during a crisis. They need you to buy their shitty bonds with incredibly low rates to continue their sick agenda of printing more and monetizing the government's endless growing debt. All right, the last question is what to do during and after that week passed. So for now, my suggestion until the end of the year, wait it out and have at least 25% of your portfolio in cash. Because let's say I'm wrong and you missed out on those sweet gains for that week, I'm sorry. But if I'm right, I just saved your portfolio. The next question would be what to buy after that. So again, I'm not Nostradamus. I can't see the future. I might even be wrong about the correction crash itself for next week. However, what to buy after that, buying the dip, depends on the severity of that crash. So in an environment of high inflation and interest rates being too low for too long, you want to invest into commodities, especially basic materials. However, a crash would lower inflation. I don't think it will reverse it, but it would significantly lower it. So in an environment of low inflation and low interest rates, or basically at the bottom of a depression on the business cycle curve, the best investment would be real estate and financials, as those two sectors would pick up first in that new environment. And after that phase, we would be in an expansionary phase again, with the Fed stimulating the economy further. And then you want to go into, growth sectors again, like consumer discretionaries, tech, and all that. However, the more likely scenario will be that inflation is not going to be reversed or lowered to a level of significance, and GDP growth is remaining low and unemployment is remaining high. That would mean that we are in a stagflation. And during stagflation, you really want to continue investing and being in defensive sectors, especially commodities, basic materials, energy, and industrials. Besides commodities, the real estate sector is also a good investment. Okay, so that's it. I hope it helps. I don't have any fancy visuals on this video, but I hope what I'm saying makes sense to you and can help you prepare and be ready for whatever is going to come in the future. If you like my content, if you like my market updates, which my TikTok videos are, then please consider following me on Patreon. I put the link below the video. Click on it and have a look. You can follow me on Patreon, and that's where my blog is. So I write market updates during the week, 4 to 5 times during the week, and you will see and be able to read my take on the markets every week directly from your email. Also, you would be able to join the Line chat and chat with me directly and other Line members as well, which are very, very smart people. So have a look. Maybe you like it. You can cancel anytime. I'm not selling a course or selling you something that's incredibly expensive, making money off of you. It's just my blog that I'm writing. I'm very passionate about this topic, and I hope it helps you. So, thank you so much.